Thank you, Howard, and good morning, everybody. As Howard said, I'm editor of International Construction Magazine, which is a sister magazine to Demolition and Recycling, which you're all very familiar with, I'm sure. What I'm going to talk about today is a general look at global construction markets, just starting off with the economic picture and then moving on to look at construction markets specifically. And there is a very close link between the broad economic picture and construction. I'm going to take that further in the second half of the presentation and look at the relationship between construction and demolition. And hopefully, by giving you a global overview, it might spark some ideas about what opportunities there could be for you out there in the wider world. So just a brief bit on my magazine, International Construction. We're the only broad global construction magazine. We cover the whole industry. Demolition is obviously a part of that. The magazine was 50 years old this year, which is something we're very proud of. And as I said, it's published by KHL Group, which you're obviously all familiar with since you're here this morning. So this is the way the world looks at the moment in terms of economic growth. We've obviously come from a very difficult period in 2009, and we're now looking at a situation where we're seeing something of a recovery. Obviously, the problem area at the moment is the European Union, where there's basically no growth. And if you look to the other developed markets, you'll also see that they're pretty much weaker than the developing parts of the world. The USA, again, coming back, but really sort of quite low growth. And again, in Japan, not really a lot to write home about. If you contrast that with other parts of the world, obviously there's very strong growth in Asia, and also in Southern Africa, although that's a much, much smaller market, and I'll come on to that. But elsewhere in the world, in North Africa and the Middle East, Latin America, CIS, you are seeing reasonable economic growth at the moment. Looking ahead to next year is a little bit difficult at the moment with all the uncertainty in the world, but I think what you can say is the situation in Europe certainly won't improve. It'll probably get worse because of the euro crisis. In the US, again, looking at fairly weak growth. And, that's not something that's going to change next Tuesday when, with the presidential elections. Whoever gets elected will still face the same problems, the same deficit, and really the same very difficult juggling act to try and return the country to growth. But again, elsewhere in the world, pretty strong growth. We see the Middle East and North Africa improving a bit. And again, sort of pretty steady progress in CIS, Latin America. And overall, the improvement in other parts should lift the global economy a little bit. But this is the point I would like to make. Wherever you are in the world, what you're experiencing now in terms of economic growth is clearly not as good as it was in the boom years. The exception may be the US, but again, that sort of pre-crash time was not sort of particularly impressive if you look at 2007, because their slowdown had already started. But if you look down that list, whether it's the European Union, China, developed countries in general, the growth you're seeing at the moment is weaker than it was sort of 5 or 6 years ago. So in summary, economic growth will be worse than in the boom years. We're out of recession, it would seem, everywhere except Europe, but you're not really returning to those glory years that we saw. What growth there is in emerging markets, but again, that's not as good as before. And I think the point here is, you might look at that picture and see sort of 5-6% growth in developing markets. For them, that's actually quite poor. Developing markets need much higher growth to keep the development turning, to keep up with inflation and so forth. So, although the numbers might look impressive, there are countries that are feeling the pain, maybe not as much as in Europe, but they are feeling it compared to a few years ago. And there is obviously some recovery going on in developed markets, but it's weak. And the reasons that make that weak are not going to go away. We hear in the news every day there's too much debt in the system, particularly in some of the troubled countries in southern Europe. And my personal opinion is that part of it is due to the calibre of our politicians. The policies since the world has come out of recession have been poor. There's been too much focus on reducing the debt and not enough on driving growth. And, frankly, I think we have to question whether our political leaders are up to the job and doing the right things. So just to move on from the general economic picture and talk about construction, as a general rule of thumb, construction output is about 10% of GDP. It varies a little from place to place, but that is a good guide. And also GDP growth and construction growth tend to move pretty much in sync with each other. So that means that the global construction market is about 7.5 trillion US dollars. As I said, there is a track with GDP, but obviously in different parts of the world, specific policies or events, if you look at major sporting events, as we've just had in London or as are coming up in Brazil, can give the industry a boost. This is the relative size of the construction markets, and as you can see, the biggest chunk, if you like, is Asia, and I've included Australia in there just for kind of convenience. Europe and North America together are about half of the global market, and obviously that's a problem because there's not very much growth in those places. And then a few of the other regions I've talked about show good growth, but are relatively small slices of the pie. So we're in Europe. I'll start here. The size of the market, about 1.45 trillion US dollars, and it's a market that's falling at the moment, falling at about -2%. Of course, we all know Europe. You can't really talk about it as one cohesive big region, and there are good parts. Germany and Scandinavia are growing, although possibly not as well as they have been in the past, and probably seeing something of a slowdown. Obviously, the indebted countries are seeing a lot of problems at the moment. Spain and Greece are obviously in the news a lot, so, you know, there's not a lot of construction opportunity there. The forecast is for recovery around about 2014. If you're someone like me who follows these reports and these forecasts, you will view that with a certain amount of skepticism because that recovery in 2014 has been promised for about 3 years now. So, okay, we remain hopeful. But I think even the biggest optimist would say that when that recovery does come, it's not going to be that impressive. You know, it's not going to suddenly shoot back up to the high activity levels that we saw before. It will be sort of 1-2% improvement. And of course, as we all know, governments in this region are cutting back. And what that means specifically for the construction industry is a cutback in civil engineering predominantly, because that's normally paid for by public funds, but also that affects other areas that are also close to your hearts. Things like public buildings, schools, hospitals, also are being cut back. And I think the other thing to say is really what a low ebb the industry is at, as Giuseppe alluded to. The volume of the market is about 20% below its peak in the boom years, and obviously that's a problem if you think of the volumes and the work levels that people were used to only about 6 years ago. Turning to the US, it is looking brighter. The market is about 850 billion US dollars, and at the moment the growth is about 6%. At the start of the year it did look quite a lot better than that, but it does seem to have slowed down as the summer's come in. But the important thing is there is a recovery there, and the recession has been very, very long. That recovery is coming from a low base, but it is coming. But again, the point is the volume is very low. The US construction market went into recession long before everywhere else in the world because the housing market started to decline, and so it's still about 30% below that peak. So yes, there's recovery, but I'm not sure there are many US contractors and US demolition contractors that think, you know, great, here we are, we're off again. The private sector is driving the growth, and particularly the manufacturing sector. The public sector is falling, and again, that's linked to austerity. And again, as I said at the start, that won't change on Tuesday. You know, if there's a change in president or if President Obama stays, the balance sheet and the books will remain the same, and there's no really easy way out to stimulate growth for the US. And also the housing market is still weak. There is growth there, but it's fallen from such a high to such a low that, okay, there's growth, but it doesn't really feel like it's a market that's back to full health. Just to move on to developing Asia, again, a very big market, but obviously an awful lot of countries make that up. But there is good growth there, about 6%. is not as strong as it was before the boom. There's a slowdown in China. We've seen that for the last 18 months, 2 years or so. And that's driven by measures to curb inflation and to curb a bubble that was seen in the real estate markets. Now, again, that may change in a couple of weeks. There's a change of leadership coming in China, and that is normally accompanied by big policy announcements. It's not just the leadership that will change. It changes throughout China, provincial level and city level. So there'll be an awful lot of new people coming in, and they will want to make their mark. So personally, I'm quietly optimistic that China will get a big lift in the next month or so. There is growth in other markets. If you look at places like Indonesia, Vietnam, you have to pick them out, but there are good pockets of activity around. And the general point I think to make about Asia is the focus is on infrastructure projects and energy projects, which obviously are attractive. You know, they're big schemes. They're often funded by the World Bank or the Asian Development Bank, and that does give them a certain sort of credibility and possibly a bit more security than if you're dealing with a local government or a local private sector player. Just to turn to Latin America, Brazil dominates. That's very clear. And within that, we all know about the Olympics and the World Cup, all the work that's going on to build venues, but beyond that, all the supporting infrastructure. So a very, very attractive market at the moment. But the thing is about Latin America is there's more to it than just Brazil, and there's more to Brazil than just the Olympics and the World Cup. The energy and infrastructure markets are looking very attractive, particularly the oil sector. Obviously, it's a country with some very useful oil reserves. Again, some of the smaller markets are quite attractive. Chile just seems to be running things quite well, as does Peru. And if you look at Panama, you have the biggest construction project in the world in Panama at the moment with the expansion of the Panama Canal. But beside that, you know, very interesting things going on. Panama is building the first metro system in Central America. And you see these little pockets, these very interesting projects going on all across the region. Having said that, it's not a totally rosy picture in Latin America. There are some troubled markets. In Venezuela, Hugo Chavez has just been re-elected, and I don't wish to make a party political point, but there's no doubt that he is bad for business. You can't go around expropriating the oil business from international players and taking the cement industry away from international players and expect people to come and invest in your country. Similarly, Argentina is a bit troubled, fundamental economic problems there, and also a government that kind of isn't completely honest about the figures it puts out, and also has employed this strategy of, you know, whenever the news looks really nasty and everyone starts picking on them, they bring up the Falkland Islands again. You know, that's a strategy, but whether it's right for your country is another question. But overall, we at KHL are very bullish about Latin America. We launched a magazine there 2 years. We see good long-term prospects there, and I think if you look at sort of the economic forecast, you would tend to agree. Middle East and Africa, relatively small market, but again, you're talking about an awful lot of countries, an awful lot of different pockets of activity. It's largely commodity price driven. So when the oil price is up, you know, everyone goes crazy and starts spending money, but when it's down, it does shut down a little. So there's not sort of the stability that you'd like long term in all those places to be able to invest in construction projects. A lot of the governments in the region recognize that, and they are looking to diversify. That's kind of a long-term project, but it will, I think, promote better long-term prospects for the construction industry. You also have to look at the impact of the Arab Spring. I mean, on the whole, long-term it's good. You know, no one's going to miss the dictators from the region, but you know, you have to question what will come in and take the place, and whether what comes in will be significantly better than what was there before. But having said that, there is very high growth in places, and there are good prospects, although it is obviously a very sort of up and down market. You have to question the business climate in the Middle East and Africa. It is a fact that poor governance, bribery and corruption are very much linked to the poverty scale, and the poorer the country, the more likely you are to get those problems. And again, that's a big problem. It's not something you can solve overnight, and it's something that's a challenge for anyone who wants to go in there and invest. The construction markets in the CIS, again, Russia dominates, very much as the case in Latin America with Brazil, and it is a market that's driven by oil price. I think it's something about 70% of Russia's exports are hydrocarbons, effectively. So again, when the oil price is up, it's great. When it's down, everything shuts down. In terms of construction, there does seem to be a focus on the major events. Obviously, you have the Sochi Olympics coming up, which has some fantastic construction projects attached to it. And further on down the line, you have the World Cup in 2018, and they've just announced about a $6 billion program to refurbish the stadiums and the other sort of training venues for that. So again, there are sort of attractive little pockets of activity there. But again, you have to question the business climate. You know, Russia really isn't that friendly to Western countries, and there have been some big headline news stories of major companies that have got burnt in Russia. So again, it's not good long term. And again, a sort of slightly personal thing, I do tend to feel with Russia that there is a bit of a lack of a long-term plan. You are seeing little pockets of progress with a road building program that's more accepting of the PPP model, and there are some big projects being let as franchises. But it does seem to lack that sort of overall vision and the thing of, you know, this is where we want to be in 10 years and this is how we're going to get there. In other parts of the region, a lot of the smaller countries, again, it's all sort of oil and gas related, but they are diversifying, and you are seeing some, again, interesting pockets of activity where governments want to sort of modernize and want to kind of come into the international community. So there are small opportunities there. So overall, that's kind of what the construction growth picture is looking like. As I'll say again, you know, if you look at the US, the growth does look pretty impressive compared to other parts of the world. But again, you have to remember what a low it fell to. And as I said, you know, there probably aren't that many US contractors who are thinking, yeah, you know, we're back there, we're up again. But that's the general picture. You know, I think the only sort of down point really is Europe, where austerity measures are curbing growth and the euro crisis is impacting. So the recovery has been slow following the recession. At the moment, I tend to feel we've kind of hit a temporary speed bump with the euro crisis, which doesn't just affect this region, but is having an impact on business confidence around the world. And the other sort of big factor that kind of weighs on the global picture is the slowdown that has been seen in China. But as I said, I'm hopeful that the situation in China will improve in the next couple of months. In general, the developing markets offer the best growth prospects. And as I said, it is good that the focus there is on energy and infrastructure. They're big projects and they have serious sponsors. So just to move away from the general construction picture and just have a little look at demolition now. And demolition is clearly linked to the construction industry. So if you want somewhere for a good demolition market, look for a good construction market. Of course, not all construction projects have a demolition element if you're building on greenfield sites. It is generally something that hangs on regeneration, brownfield development, and a change for the use of land. And that means predominantly it is a developed world industry where you're talking about cities and settlements that are kind of going through a second or third phase of development. That's obviously a big generalization, and later in the program there's a speaker on India, which I'm particularly looking forward to. But as a crass generalization, and I'm a journalist and that's what I do, we are looking at developed world industries. Just to talk a little bit about the structure, there are 100 major contractors that have revenues of about 1.2 trillion US dollars. The largest group of them is the Chinese, with almost a quarter of those revenues, and 5 out of the top 10 of that list are Chinese, including the top 3. So that pie chart, I wouldn't try and scribble all this down. I believe the presentations are available later. But that kind of gives you an idea of how the top 100 contractors are structured. Now, compare that to the DNRI 100 list, which, if you're not familiar with it, you'll find it in the May-June issue of the magazine, which is outside on the table. Obviously a much smaller industry, about 4.7 billion US dollars revenues last year. So that's about 0.4% of construction if you sort of put the top 100 next to each other. If you kind of multiply up in the same way that you do with the construction contractors, it would suggest that the global market is about 30 billion US dollars. You know, I'm very happy to be challenged on that figure, but that's just sort of one way you could look at it and maybe assess the world market. And the largest group within the top 100 is the USA. But I think the really striking thing about the DNRI top 100 is 90% of the companies and 90% of the revenues come from Europe and North America, which is obviously very, very different to the way the global construction contractors are structured. So this is just one way of illustrating it. On the left, you have the demolition contractors. On the right, the construction contractors. So you have a huge chunk in Asia, Australasia, and the rest of the world in terms of construction that would appear to be untapped by the demolition industry. So as I said, 90% of activity in terms of demolition is in Europe and North America, but those markets are only 50% of global construction markets. And the other thing you've got to worry about, and again, Giuseppe alluded to this, that these markets are not the most attractive at the moment, particularly in Europe. So what might the opportunities be? You have to question how much work there is in developing markets, whether there is sort of regeneration of cities going on, or whether it's more sort of greenfield development. But there might be possibilities there. And just going to put a few questions to you as contractors. Could you enter those markets as contractors? Could you enter those markets as a joint venture, finding local partners? Or again, you know, an interesting possibility, you may be sort of contractors at heart, but whether you have the ability to enter those markets in some sort of consultancy basis, offering the expertise and the techniques that you developed in sophisticated markets like Europe and the US. So I'm going to end on that by posing you those questions, and it's obviously difficult to get into new markets, but with the home markets being as difficult as they are, it may be a thought worth entertaining. So if you'd like more information on anything I've spoken about, khl.com is a great resource for you. There's daily news. I'm sure you're familiar with it from the demolition news that goes up there. But if you look at the archive, there's something like 20,000 articles that you can search. And you can also go online to subscribe to our magazines. They're available in paper, digital. You can even get them on your iPad now. And there's a lot of other ways you can get information from there in terms of podcasts and videos. So thank you very much for your attention, and with that I'll hand back to Howard.